Welcome to the weekly swing low. It's April 27, 2025. And it is looking more and more like we do have a bottom in place because we now have that weekly swing low we talked about we needed. So let's jump right into the tickers. We'll start with SPY as we usually do, and we'll start with the weekly chart as we talked about. You see this line here? We needed to get above the high from this candle that marked the low, and we did that, right? That was a close above $548.62, and we did that, right? We closed a couple of dollars above that. And note, last week was a big bullish outside weekly candle, right? We made a lower low, and then we closed as a higher high. And if we zoom in on the daily chart, like we talked about how this giant green candle that came, I think this was the day that the pause was announced, that we were gonna have a 90-day pause. All of the price action since then has been just consolidation inside that range, and we're finally poking our head above that range. And note that there is a gap fill, right? We talked about this right there. So price would have to get to 554.81 to fill the gap. That was this gap that happened from this day to this day, because we already filled this gigantic gap. That all happened within this price discovery. So the thing to keep in mind, though, is if this was a daily cycle low and also your weekly cycle low, so it would be a weekly cycle low on week 12, a daily cycle low on day 17, that means we're now on day 13. Not super early, right? So that's important to note. And the point there is that even if this is a long-term bottom, we are going to get a daily cycle decline at some point. So you want to watch for that, like when this thing kind of tops. But I would imagine we at least fill this gap first. And this is SPY, but all the other indices are showing a very similar pattern, just different levels. So in terms of how you play this, in terms of risk, you like let's zoom into the hourly chart to just kind of get a sense. So you see this big hammer candle here. You could play the low of this candle. So that's below, call it 546.76. So somewhere below that. Theoretically, price should stay above there. Even better would be if we get a breakdown below this low, or maybe even below this low. Like imagine a lower time frame candle that looks something like this, right? Imagine how many people that would wash out, right? They'd be like, oh, okay, we've broken this low, and then it just kind of reverses back. So that would be your best case, right? Like wait for a false breakdown. But at this point, again, to be clear, just to go back to that daily chart, the level that really controlled everything was this level here at, what is that, 523.17. Once we broke back above that, just to recap what happened in the week, we actually Monday made this lower low, which is what started the bullish outside candle pattern, because this low is below this low here. That's how you went. I'll just draw a line here so you can see that clearly. That's how you got the bullish weekly outside candle. But then Tuesday we got a reversal. And where did this reversal happen? Super important. It's right at that 523 level, that level that's that daily swing low. Because bottoming is a process. We first need a swing low on the lower time frame, and then we eventually get one on the daily, which we've had for a while, and then we need one on the weekly. So what do you suppose comes next? It's a monthly swing low, obviously, right? And so look at the shape of this candle. This is a candle that is trying to go from red to green. The monthly candle opened at 557.45. So that's about $7 above here. If we could get back to 557.45, this red candle becomes green. And we only have a few days to do that, right? We're obviously going to close the candle this week coming up. So if price can get back above 557.45, we now all of a sudden have a green hammer. Even if it doesn't go green, look how bullish this is. This gigantic hammer breaking below this low looks like a great setup. That this was your little decline, and now we rock it back up. So to be crystal clear, what we're going to want to see in April is this, right? Like this is a setup for a major low, and this is what you would want to see. So in April, You want to see price break above 567.42. That's still a little ways up above here, so there's some upside to catch before we even get there. But once price is above there, you now have a monthly swing low in place, right? This becomes a potential monthly swing low. Again, a daily swing low turns into a weekly, which turns into a monthly. A little shortcut to that is to look at this custom time frame. So you can kind of like, in TradingView, you can create any time frame you want. And so if I look at a 2-week time frame, so now each candle is 2 weeks. Look at what this is showing. This is almost like a little hidden. It's all the same price action. You're just cutting it up a different way. So if you look at the 2-week candle, we don't have a swing low yet, right? We have a weekly swing, but we don't have a 2-week swing low. Price needs to break back above that 567. So in this case, that's the same as the monthly level. So we're just an inside candle here. But again, if you look at this, look at it from this perspective as well. This is a big bullish green hammer right now. And so this close this week actually. So we're going to have a new 2-week candle next week. And so you would expect something like this. And so if price can trade above 551.05, we now are potentially leaving this 2-week swing low behind, which is your first step to get a monthly swing low. I hope that makes sense, right? Like just think about it. Each lower time frame swing low creates the opportunity for a swing low at a higher time frame, and so on and so forth. And so that is let me flip this back to weekly, and let's just talk. We talked about, so somewhere below 546.76 is where you might want to place your stop. Below that, if price sustains below that, then maybe we're getting a bigger reversal. And the bearish case is that this is a false breakout of this high, right? That this whole consolidation is actually setting up for a lower, but we're going to poke our head above higher first, grab some liquidity, and then make a move down. We could also just ping pong inside this range, right? Doesn't mean we have to collapse all the way down, but that's what you want to look on the bearish end of things. All right, so let's go through the other tickers. So that was SPY. What about the Qs? Qs showing the same thing. Nice weekly swing by closing above 467.83. Also a bullish outside candle, just like SPY. And for QQQ, your risk level, if you look at that hourly chart, is right below 468.74. And again, remember, very likely we get a false breakdown below that level, which means we get a candle that trades below that level, maybe even closes below it, and then we get a violent move back up. Once price breaks back above that level, that's your trigger for the false breakdown trade to get in, because you're leaving stops behind you. You're leaving people that got trapped. They're like, oh, I sold because your stop was there, for example, and now the trade is going the other direction. So you have the potential for chasing. So that's SPY. And again, you can see the pattern here. In this case, the Qs actually closed pretty, like even the low from Friday was close to above the high from this, call it, the pause candle. So that Wednesday when the tariffs were paused. So that's pretty bullish. And that tells you that QQQ is outperforming SPY, as we have been talking about. So on the weekly candle, the ratio of QQQ to SPY actually made a bullish outside candle as well. That is very bullish for the market. That tells you Q should outperform SPY, and the market generally is in rally mode. And if we just look at QQQ on the monthly level, ooh, look at that. Ooh. So QQQ is already green, right? So QQQ is giving you a preview on the monthly chart, I should say. QQQ is giving you a preview of what we could expect from SPY if things continue to be bullish. Again, same idea. In April, you want to see something like this, right? This is what you expect from the April candle. And that would mean trading and sustaining above 479.56. But look at this, man. This is a little green hammer. This is a preview of that SPY candle. That's looking super bullish. And of course, that means tons of individual stocks have also potentially bottomed as well. So that is the Qs. What about the Dow? So the Dow is underperforming SPY and QQQ because you see this candle from the Wednesday. We haven't even gotten back above it. Right, so that high for the Dow is 40, and this is DIA, the ETF that tracks the Dow. That high is $407.59. So price actually has to get back above that because we're still just trading inside the range. So Dow is probably not the place that you want to be. You need to be. The monthly candle goes green above 418. We probably don't have enough time to get there since we're closing this Friday, or this week. But that's an important level to note. And again, not to belabor the point, we also didn't get a weekly swing low either, right? Price has to get above that 407 level that we talked about. That would give you your weekly swing. So best case scenario for the Dow is something like this, right? Also, just to keep in mind, just for tracking, if this was your long-term low, we're going to be starting week 3 of the weekly cycle next week. So that's important to be aware of. What about IWM? So IWM, similar kind of situation to the other indices, the QQQ and SPY, in that we're above that Wednesday reversal. The only difference is we actually didn't have a swing low in place until we got it on Thursday of this week. So IWM was kind of late, and for IWM, it's really like this cluster of lows. I hope you can see this. This is like 3 days where price essentially made a low around the same level, right? And so we kind of need to trade above the cluster of these candles, which we already did. So by breaking above 192.11 and closing there, that's your daily swing low. And I think we also got our weekly swing too. Yep, we got a weekly swing as well. So you can see this is the candle that marks the low. So your weekly swing is at this high here, which is that 192 level. So IWM looking okay here for in terms of risk level for IWM below 192.26. So actually right around that 190, that swing low level on the weekly. You can imagine for all the indices, for all these things, once price makes a swing low, the level of that swing low is going to really matter once price trades down below it, especially if price trades below it and then recaptures it. Your classic false breakdown. All right, let's move on to SMH. We'll go quicker now. Same kind of levels. Ooh, we'll start with the monthly chart. Look at this thing. It's one of those cases where like the monthly candle just went green. So for the monthly, like big picture, you want to see this thing trade above 216.61. Again, not to belabor the point, but like just visualize something like this. That's a super bullish sign, especially since this thing topped out in July 2024. So we've actually been declining for quite some time. I mean, it was a very gentle decline in the sense that we just kind of consolidated for many months here. And then we had this violent move down where it's like, oh no, where's the bottom? And now we've kind of reversed up pretty violently as well. This could absolutely be your long-term low. The same for the other indices, of course. This is just more dramatic because the decline was more frustrating, right? Like we topped out again almost a year ago at this point. And so on the lower time frames, if we look at weeklies, so weekly, so this one didn't actually quite make a weekly swing yet. That's important. So the weekly swing for this one is above 212.81. That's an important level to pay attention to. But we're super close. In fact, we touched it and then kind of got rejected. So we'll watch for that. That's super important. And again, just like the other indices, that weekly swing coincides with the high from the Wednesday pause candle. So this is the SMH version of that pause candle. Again, just I hope you're seeing this. All of this action is just inside this range. And then we actually even traded inside this range for like 3 days. We broke down below it and then whoop. So it's funny. This little thing is actually a false breakdown of this. So you can have false breakdowns inside inside ranges as well. It's the same principle though, right? Anybody that had their stops here, they've been taken out by this move here, and then price just reverses against you. Bye-bye, right? Like, and not to belabor the point, but these candles, I hope you can see that. These 5 candles, you wrap them up into one candle, one weekly candle. It broke below the low here, right? And so that's your weekly, your bullish outside candle. So important to understand price action, like really, really intimately. And in terms of your risk level, you can see this kind of like cluster here, right? So like below 210, call it, in that area. You want to watch for that. Again, false breakdown of that area. Because I would say at this point, the bias is to the upside. So a break below a level is something that you want to be watching as a potential false breakdown as opposed to, oh, let me just pile in short here. So that's SMH. Let's move on to let's look at the ratio of SMH to SPY. So it's starting to outperform. We have a little weekly swing. That's important when SPY and or when SMH and QQQ are outperforming SPY. And look at this candle. Oh my goodness, that's beautiful. Look at that candle. Beautiful hammer candle. When is this top? Oh, so that's interesting. The ratio of SMH to SPY actually topped out in June, whereas the absolute, like the actual price, topped out in July. So that was almost like an early warning signal for you, right? And then we got this huge decline, and now we're getting an early bullish signal, right? Look at this hammer, my friends, at the end of this drawdown. Again, what you'd expect here is a candle that looks like this for May to begin our another a move kind of back up the levels, right? That's your bull case, right? Like that would be your beautiful V recovery, which would happen over the course of months. So a nice long-term trade, plenty of time to catch the upside. So this is super, in some ways, this is one of the most bullish signals, because the same way this was an early bearish signal, this could be your early bullish signal that we're about to be off to the races. So that's the ratio of SMH to SPY, important to take to note of. Let's move on to the dollar. So the dollar is trying to bottom here. We had talked about this last week, how this decline was really nasty, but it was also super late, right? Like you don't want to be chasing downside when you're like already when you've been declining for so long, and in historical terms, like a 30-week weekly cycle is actually kind of long for the dollar. And so we don't have a weekly swing yet, to be very clear. Price has to trade, you want to see something like this. So price has to trade above 99 spot 94, to be clear. That would give you a weekly swing. And in terms of timing band, it's perfect, right? This would be on week 30. Now, it doesn't mean we're going to get a long rally. This could very likely end up being left translated and then roll over. Let's look at what the daily picture is telling us. So on the daily chart, looks like we're on day, we're on day 4, or Friday was day 4 of a new daily cycle. Because keep that in mind. Every weekly cycle low has to be a daily cycle low as well, and so on down the line, right? Like a 4-hour cycle low as well, etc. And so we're probably pretty early in a new daily cycle. And if this is going to be bearish, it should top out by day 10 or 11, right? That, like, look at this one. This was a little 11-day rally. This was a really short one at 5 days. Like you can see, these rallies don't last very long. So if we're going to get a bearish weekly cycle, you would expect 4 or 5 more trading days of upside. So maybe next week we get some more upside. Again, that's if this is going to be bearish. And in terms of levels, if this thing were not like, you want like the level that this thing needs to stay above to continue to rally, I would call that 98 spot 86. And on the monthly level, look at this. Look at this nasty consolidation. But equally important, look at this big swing high here, right? Within this nasty consolidation. Now, I think we talked about this. This bounce here is happening exactly where you would expect it to happen after breaking below this low. And so now the big question is this just a pause before we kind of spill over a little bit more? I suspect that might be the case. But again, we're not here to predict by any means. Let's move on to the 10-year U.S. Treasury yield. That had been moving in concert with the dollar, but now it's diverging. So the U.S. 10-year Treasury yield actually made its low back on week 28. So a couple of weeks before the dollar made its potential low last week. And we're still, so by trading above 4.26, a weekly swing is in place. We're now at 4.29. So you want to watch that 4.26 level. Again, not to belabor the point, but a move below that level and then a recovery would be actionable, would suggest higher yields to come. Because as it stands, this looks like it's a new weekly cycle. And that would mean that this is week 3. Again, all of like the last 2 weeks have just been consolidation inside this gigantic range. But the really big first warning signal is a break below 4.26. Again, that would mean that this weekly swing low is no longer in place. And if you think about the daily, we are on day, So this is your high on day 4, and we are currently on day 13. So if you think even more tactically, we already have a high on day 4 of this daily cycle. And so if we're going to see here something really bearish, it's possible that we already have our top for the daily cycle, which means we also already have our top for the weekly cycle, which means this move, this little price discovery here, like, these 2 weeks is going to end lower, and this is your high here. Impossible to know for sure where we're going to net out there. So we're going to have to keep watching this very closely. And if we look at the monthly, that might give us a little bit of a clue. This is right now a bullish outside monthly candle. The catch is it's also a doji, which means it can easily turn into a bearish outside candle. This thing opened at 4.22. So if it moves below 4.22, all of a sudden this green monthly candle turns into a red one, and just adds more evidence potentially that these two are something like a double top, right? So instead of this long consolidation resolving higher, this may be a suggestion that this is going to resolve lower. And we had talked about this in previous updates. That 3.25 level, that would be a very logical place for price to visit at some point. And so if we're getting if we get any further bearish evidence, if we continue to decline, if this goes red, that would be where you would look to the downside. But right now it looks like we're actually trying to rally. And yeah, so that's 4.26 level. That's the big one. All right, let's move on to oil. What is oil doing? So oil is still bouncing a little bit. So oil just finished week 2 of a weekly cycle. We talked about how breaking below this long-term low, you would expect some kind of bounce. The catch though is price is right below this resistance level. So call that like 65 and change. So let's see if price can break above 65. Otherwise, this rally may be over, right? It's already rallied for 2 weeks. So we could just have a bearish weekly, that could be your early weekly cycle top. And if you look at this absolutely has the makings of a bear flag. This is so we're on day 11 of the daily cycle. And we have a potential top on day 8, day 9, right? So this could be your potential top. Price would have to trade below 61.55, right? So like look at this line here. Price trades below there. That makes this a swing high and your potential daily cycle high. So that is oil. What about TLT and then our friend TBT? So TLT, so this one looks like it has a weekly cycle high back on week 11. This is week 12, 13. So we just finished week 14. Complicated thing is this was now a bullish outside weekly candle. We didn't quite break below this low. And so what does that mean for us on the daily chart? So on the daily, price has to stay above 88.60. That's where you could place your stop. But ultimately, this looks like something that is early in a new weekly cycle or new daily cycle, day 9, that if we're going to get a left translated cycle, this is around where you would expect the top. So I would be cautious here. And TBT, which is the opposite. So we had a bearish outside candle on the weekly, same kind of idea. So for TBT, you want to watch for a break below 34.68. And again, that could be your false breakdown level. All right, so we're going to round it out with precious metals, we're going to round it out with crypto and then precious metals. So for Bitcoin, we have a potential weekly cycle low basically 2 weeks ago. So that would make, we're in the second week of this weekly cycle. So that is by breaking above the high of this candle. So I'll just mark that so it's crystal clear. So by breaking above 86,500 more or less, we made a weekly swing low, and this whole thing. So from here to here would be your weekly cycle decline. And if we look at the daily, we've just been consolidating the last couple days. So yeah, so everything has actually been inside the range of the candle from the last couple of days. And so I'd say your wider range is a low of 92,880 and a high of basically 96,000. But sort of your midpoint, you want to stay above 93,650, right? Because you're basically now entering a new tighter range, which all of this suggests we're setting up for a move higher. And if we look at what that means for the monthly, I think I tweeted about this. We were setting up for a bullish outside monthly candle, and that's exactly what we got, right? We had this candle here, the March candle, and this is your April candle. Notice the April candle broke below the low of the March candle. We're now slightly above. So the March candle has a high of 95,128. So we're right now below it. But that's going to be a level to watch, right? So 95,128. I expect we'll get back above that level and stay above that level, which makes this a little local low on the monthly chart. ETH is showing, Ethereum is showing a very similar picture. So for ETH, it needs to stay above 1688 for that weekly swing to be in place. And for ETH, we are now basically consolidating. The range is a low of 1779 and a high of like 1841. So those are the levels that you want to watch. This thing looks like it's ready to move to the upside, but Bitcoin is absolutely outperforming. So in terms of crypto, that's where I would be instead of ETH. All right, we'll move on to precious metals. We'll round this thing out. So gold is finally taking a breather, and that's not surprising. It's week 16. So on week 16, we have our potential weekly cycle high, right? But I don't think it's an 8-year cycle high, and that's all that really matters here. At this point, we're getting really close to what potentially is going to be an 8-year cycle high, a long-term cycle high for gold, and that's what you want to be watching for. But in terms of like actionable levels, next week, a trade below, and this is the spot price. This is always going to be spot, not futures. A trade below 32.60, right? So I'll draw a line here just to be clear, would make this a weekly swing high, right? So something like this. Now the catch is we've seen this story before, right? Like this candle here was a setup for a weekly swing high, and then we actually started the week with a swing high, and then we made a bullish outside candle. And so watch for that. There's a lot of buyers here. This was a weekly swing as well. This was a bearish outside weekly candle. And of course, we came back and recovered it. The catch is this is now happening on week 16 after all of this. And so you would imagine that there's more sustained profit taking at the very least. And so that's what we're going to be watching for. On the daily chart, we have a daily swing high in place as long as price is below 33.66, call it more or less. Right? And you can see I'll move this line here so you can just see that very clearly. And you can actually see price revisited that level or that zone, if you I call it, 3 times. So we revisited the following day after this big what is that called, shooter, and couldn't get back above. So you're gonna want to watch that level. That's a really important one. 33.66 for gold spot price again. So that's gold, and silver is showing a very similar pattern. I will note that silver actually did break down below the low, below the previous weekly cycle low. So that's not super bullish, honestly. On the daily chart, silver, watch for a close below 32.78 to signal that we are declining into a daily cycle low and potentially a weekly cycle low on silver. What about the miners? So miners also showing the setup for a weekly cycle top. For the miners, you'd need to see a close below 47.77. That's a close below this low here. That would be your weekly swing high. So that, we could potentially get that next week, right? So something like that, right? And on a daily chart, we already have a swing high in place. That's once price broke below 50.95. So on the bullish side, a recovery of that, and that's all. I mean, that's a little bit of a ways up from here, but a recovery of that would be uber bullish. But your your shorter term signal, bullish signal, is, I would say, a break above 48.80. So you can see that's this candle here. Look at this little hammer. If price were able to break back above that, what would that make this? What would that make this area here? That's right. It would make it a daily swing low. It would make it a higher low versus this low, which is higher than this low, which is higher than this. You get the picture, right? Like that. So that's what you want to see. So that's the miners, and I believe the ratio of miners to gold is actually still outperforming. Let's see, or GDX to GLD. Well, actually, that's important. So the ratio of GDX to GLD, so miners versus gold, actually formed a swing high as of last week. It closes a weekly swing high, so that's important because that's usually a sign of weakness in the metals if you're seeing the miners underperforming the metal. So we're going to be watching that closely. So we'll close out with natural gas. So we had talked about natural gas was in a weekly downtrend, and that downtrend continued, right? And so on a daily chart, okay. Well, Friday was a little bullish hammer, so there is hope here. Actually, we're trying to form a daily swing low. Price has to close above, call it 3.06, right? Like imagine a daily close on Monday, something like this. That would be a daily swing low, and very likely a daily cycle low given this pretty big decline. Now the question is that enough for a weekly swing? I mean, if you think about like this decline, like what percentage is that? That's wow. Jesus. This thing like really can move. So this thing has fallen 41% this weekly cycle decline, a little more than that. So that's more than enough of a decline for us to see a little rebound, something like that, right? That begins a little rally. Doesn't mean we're going, back to break this high by any means. And if we think about, so what did we say? Right. So a break above 3.06. Now, conversely, a break below 2.93 would break below Friday's high and like basically kind of negate this hammer, right? Like kind of offset it, if you will. So you want to watch that to the downside. So those are your levels. Thanks for watching. Very hopeful out there that we do have a bottom. Most important thing is to focus on the price action. You'll see people out there on X, on social, just kind of talking out of their ass. Focus on the price action, the principles. Thanks for watching.